Yo, ladies and gentlemen, what is going on? So forgive me for making this video so late. I don't have the best internet connection. Takes a little while to buffer these HD videos onto YouTube. But nonetheless, let's have a conversation about today's madness in the chart. Well, let's just go back and look at Bitcoin in the live stream from last night. Okay, the video, sorry, from last night. And we were talking about this structure right here with Bitcoin, okay? And how the 200 EMA on the weekly time frame is a very important point if Bitcoin was going to break it. Why? Because people put orders at this point. They put orders all over the place on the moving averages. Now you can see on the weekly, Bitcoin has done just that. It has violated the 200 EMA, gone down even lower, and it's already started to work into the previous vector candles. Get on your charts, guys, and mark off the remaining ranges for the vector candles in the chart itself, as you can see right here. Okay. Now, this video, I'm going to try and get as much information as I can packed into this. So if you are new to the channel, mad love and respect for passing through. If you haven't done so already, be sure to like and subscribe, where tomorrow I'll be able to get onto the live streams because we have an interesting week. A week packed with news announcements. Why are the news announcements important? Because it's all going to be based on what's going to happen for the economy, for the US, in relation to what the FOMC is going to decide. The FOMC on Wednesday will be projecting out the current situation that they foresee in the future with the US dollar. Now, the US dollar itself, given with today's price action, has seen some very interesting moves. So firstly, let's have a look at the actual dollar index itself. Let me just pull up this right here and pull up what's moving. Here we go. So the dollar index still flying up, ladies and gentlemen. Still always going to be a problem for Bitcoin. And if I'd actually look at the monthly time frame for the dollar index, look at this madness right here, guys. We have got some mad zones that they could actually come back up into in relation to the actual dollar index. 108, 112, 120. Could you imagine? Back in 2002, ladies and gentlemen, it was 120. Now, what's that going to mean across assets? For assets across the board. Euro USD is just going to take a bleed to the downside. If we actually look at the monthly time frame back at that point when the dollar index itself hit 120, euro was at 0.8. And that's a scary time. If you actually zoom in closer, you can see that there'll be every reason for them to come back into these points right here. Now, if that is the case, then, I mean, come on. We have ourselves a very big problem. So something needs to give. Okay? Remember, the Euro USD makes up about 56% of the dollar index itself, which is going to tell us how likely is Bitcoin going to be behaving throughout the day. If they're starting to offload on Euro and get rid of their Euro positions, then that's going to show the dollar index rising, which would then lead Bitcoin to move down lower because the narrative is they are trading against the US dollar. So any assets against the US dollar are going to drop and everything else with the dollar is going to rise. Now, moving forward, ladies and gentlemen, the S&P today has taken a phenomenal drop and it hasn't even tested that 50 EMA on the monthly time frame. Going to the daily chart, you can see bright as day. We got two gap downs. Okay? It has been a phenomenal week. Sunday, Monday. Crazy price action. They violated the 800 EMA on the S&P when the last time they did that was back in 2020. And then they did that again in 2018. And then, of course, back in February 2016 and then going back into the 2011 point. And then, of course, the bigger drop was back when they broke it in the 2007-2008 subprime mortgage crisis. Now, look. The subprime mortgage crisis was a 57% drop. Go back up here, ladies and gentlemen, and we don't really have that much of the same drop. There or thereabouts to the current price point, we've only had a 22% drop. Some analysts are calling for the idea that the S&P yet has still got more ground to actually drop. Next point of interest for the S&P is 36.38, ladies and gentlemen, which will be the nearest structure after they actually look to break out from the 37.29 range. Now, with that being said, guys, if Bitcoin has the same disparity with the S&P, and if traders are going to get rid of stock, then we're likely to see Bitcoin move down even more on the principle of it actually following the S&P. Would it be a surprise, ladies and gentlemen, if you go onto the daily time frame, you can see it bright as day. We have these points of interest in Bitcoin, and this is exactly where Bitcoin is at right now. So if Bitcoin was to start coming back up and show a little bit of a relief rally, then this is the zone that it would decide to do it from. But the narrative across the board is everything is bleeding out. So we need to mark off these 2 points of interest in the chart, ladies and gentlemen. They've already recovered this point right here. So we really want to be focusing on these zones in the chart right here. Now, I've had a few conversations with people and they've been asking me, Tino, what level are we in right now for Bitcoin? So we're going to have to take it to the higher time frame, and in relation to the actual levels, we're talking about this structure right here that I always try and encourage you guys to draw at the start of your trading week. Predominantly for the guys who are looking to day trade, this is the structure that you really want to be seeing price action forming. Where you are in the structure is a different story. You could get to the chart, look at a certain asset, and you might be in the level 1 zone right here. You might be in the level 2 zone right here. Or you could be getting ready for an M formation, which is exactly what we were anticipating on the dollar index itself. Okay, at this point right here, ladies and gentlemen, we're anticipating that the dollar index is forming that M structure right there. It has broken that point, still got room to actually try and pull back if possible. But given with the strength of the dollar and the sentiment across the board with the uncertainty, there's a good chance that we are actually going to just break out of that zone, and it would invalidate this pattern right here. Now look. What you want to do, guys, when you're trying to establish a level in a cycle, okay, we have to start from the highest point in the chart because we're looking at a bigger time frame right now, okay? So we've got this daily candle right here, the daily setup, M formation, drop level 1, drop level 2, retrace, drop level 3, yeah? And it's actually extended even more. So this move to the downside is an extension of the level 3 because they would have tried to come away from this level 3 peak formation that we've been waiting for Bitcoin to hold from in the previous streams. Okay, you notice that the W formation that we were looking for right here, ladies and gentlemen, was always going to hold if the 26 zone was able to hold, and it didn't hold. So if you were following this narrative, you wouldn't have been in any trades anyway. You would have been waiting for price action to confirm and move to the upside. It didn't happen. It's actually gone down lower. Has it come to you by surprise? You got to think of it like this, ladies and gentlemen. When you've got to factor in the realm of uncertainty, as much as this structure that we've drawn off over here looks great to look at, and we would hope that we could look at it in the chart and say, yeah, okay, I'd love to see that happening. What we like to see is different to what could actually happen. You're dealing with uncertainty, ladies and gentlemen. That's the truth of the game, and today is an example of the uncertainty. Some of you are all thinking, is today a false move, Tino? Who knows? But we know that Asia tonight has got to react to this. Now, if you're going to roll out with Asia, ladies and gentlemen, especially for my day traders, listen. Do not do anything until Tokyo opens, ladies and gentlemen. Okay? Tokyo opens in just shy of an hour and 10 minutes time. Tokyo opens in an hour and 10 minutes. They too are going to react to the marketplace. They too are going to react to this madness to the downside. So please be careful. You can see they have completely ripped the M levels. These are the medians of the standard support and resistance points. And look, M0, where's it going? It's just bleeding out in the range, ladies and gentlemen. They are rushing to USDT in principle, as you can see. USDT chart itself is actually shooting back up to that 7-8% zone. Where is it? There it is right there. Look at that. That is phenomenal. USDT dominance is actually starting to look like dollar yen. Look at this bad boy. Unbelievable, isn't it? Go on to the daily. That's on the 1 hour. There it is. Yen, 135. The Bank of Japan has got some very interesting announcements to come out. Okay, they need to start doing something about the situation. Where is it? I think it's 17th of June. There you go. Bank of Japan, the Bank of Japanese interest rate decision. They need to do something, man. They have been they've been deflating that Japanese yen for a long time because most of the Japanese investors have their money tied up in the US. Okay? Now, something to consider for my fundamentalists. This bad boy right here. Where we at? The word of capitulation is going to render its head across the board. And it's something that we may need to be familiar with. In order to understand what we're talking about, capitulation is at the point where a trader, investor, because there's two ways of saying it, there's investor capitulation or market capitulation. Now, the idea is that the investor market comes to agreement that there is no way for them to actually recover the losses that they have accumulated from the way the markets have behaved. So in principle, they are forced to sell. Are we at that point yet? Well, the glass node is showing some interesting behavior, ladies and gentlemen. If we zoom over to the actual point in the chart, you can see at this low point right here, traders or Bitcoin holders with net unrealized profit and losses are showing that they are very fearful right now because the direction is pointing lower. The last time this happened, ladies and gentlemen, okay, Bitcoin actually went into a capitulation point in this area. You see, it seems to happen when the fear is at its most. They have taken a drop right here, and you can see that they've actually gone into capitulation. Same story over here, same story over here. You're going to probably start seeing people talking about capitulation, all right? All I'm saying to you guys is this. It is hard to witness your portfolio dropping quite extensively. And you are put to the point where you say, well, if I don't do anything about it, whatever I see right now in my account or the value of my assets, I'm probably going to lose. So if you are in that situation, ladies and gentlemen, please don't encourage yourself to maintain the idea of diamond hands. I hate that. Don't get me wrong, it's great on social media, ladies and gentlemen, but the idea of true holding and true investing principles is that you pick up whatever it is that you buy. If you buy Bitcoin at this point right here and it shoots up towards 28, you would have picked up Bitcoin from 22,700 all the way up to 28,000. You are now that little bit richer in Bitcoin. Close it, wait for it to correct again. And if you're doing this during bear markets, ladies and gentlemen, for every counter trend that happens in the chart, so for every time they drop and then they retrace back up, the idea would say that you are looking to exploit that deviation back into the the reversion back into the moving averages, where you go long from here and you manage to close in this area here. The profit that you take, you bang it into a long-term bag that you have. Diamond hands ain't great, ladies and gentlemen, when you're buying Bitcoin at $50,000 or $60,000 a coin, and now you're sat scratching your head at $22,000, wondering what you're going to do next, and is the market going to turn? The fact that we have the FOMC announcing the interest rate decision and, the federal funds rate and the statement and the economic projections on Wednesday, the markets are probably going to factor in what they're likely to do. They're talking about 50 basis points. Okay. Could we be surprised with anything else? Maybe. It all depends on what happens in relation to the retail sales and the core retail sales readings that come out a few hours beforehand. All right. So just keep that in mind, ladies and gentlemen. I can imagine that some people who are holders are now probably asking, so why don't I take up trading? Listen, if you're going to take up trading, ladies and gentlemen, the best advice that I can give you, if you have been a holder, is to not go back into the mindset of a holder if a trade is going against you that you placed in a day. In other words, if you open a long and it's going against you, you've already been used to the idea of having a negative position. If you bought Bitcoin at 50, 60,000 and you've still got your positions open, or you're still holding Bitcoin and it's now at 22K, you're used to the narrative of losing because you've been holding on to it for so long. Institutional traders, you guys like Michael Saylor and what have you, who have massive amounts of liquidity, can afford to be in drawdowns. The average trader doesn't. He can't maintain that irrational way of thinking. He needs to make sure that he just gets every opportunity he can to accumulate. Doesn't matter if you miss Bitcoin's move from one point to the next. You're going to be able to see it again, ladies and gentlemen. The cycles repeat themselves. The patterns repeat themselves. They do the same thing over and over again. Now, this move to the downside is purely psychological. Everyone is scared across the board. They are running for cover. Gold, at the same token, is dropping down, but I think they have set gold up to move back up. They have set gold up to move back up because think of it like this. If you're an investor, would you not want the one safe haven to be as cheaply as possible before any news announcements are going to come out. And the fact is, the news that's coming out by the Fed, everyone knows what's going to be discussed. They ain't going to come up with no surprises, to be honest with you, because they can't throw off the market like that. So the marketplace will always factor in the basis of the news. They will always factor in the future right now. Because this is how traders are feeling about gold. This is how traders are feeling about the future. This is how traders are feeling about Bitcoin. This is how traders are feeling about the S&P. This is how traders are feeling about the Nasdaq. Everything is taking an absolute bleed to the downside. Are we expecting a bit of a recovery? We will know tonight in the Asian session. So just keep an eye out on the Tokyo Open and the Hong Kong Open, ladies and gentlemen. Okay? Now listen, forgive me if the video has been too late for you, ladies and gentlemen, but all I'm saying to you tonight in relation to Bitcoin is be mindful of Tokyo. They are working the vector candles right now on the weekly time frame. You know what the levels are in relation to the daily time frame as well. Please keep an eye out on these zones, ladies and gentlemen, because these are the next vector points on the daily time frame that the market maker may look to try and attack. Okay? So he has now an hour before a new daily candle forms. I'm anticipating that we could get a little bit of a recovery back up, but keep an eye out on the Nasdaq itself, ladies and gentlemen, because that's where it might actually get a little bit different, or interesting, should I say, in out of hours trading. Here we go. So Nasdaq seems to be pulling back up in out of hours trading. So that's a good little sign right there. They just need to do a little bit of a recovery as well, but we do have the news coming out on Wednesday. So if they are going to drop back down again, they're probably going to bring it back up first before they do that. But just keep an eye out on the Nasdaq E-mini futures. Ladies and gentlemen, again, I apologize. Mad love and respect. I hope you haven't all lost your minds, and I hope you're maintaining some form of structure in your trading. And if you are not optimistic about the way things are, cash is also a good position. Take care of yourselves, pattern watchers. I'll be checking in with you guys for the New York live streams tomorrow, 2 p.m. GMT. Be sure to subscribe so you don't miss out on the fire that we look to bring at the Opens. Take care of yourselves, family. Peace.